Good morning, everybody. I'm Charting Man Dan with the Chart Guys. I've been trading cannabis stocks for 13 years, 7 months at this point. We're going to check in on the sector as we had a wild week, big pop, big sell off, tightening ranges. We're certainly going to get more information this coming week. I'll tell you what's most important to me, as well as the next catalyst that the market is keeping an eye on for this sector. All right, so we got the headline that DEA is likely going to Schedule 3. Now what? Now we know it's a long, slow process, which is pretty much what this sector is always used to. And that's because the political process is determining things and it's extremely slow and brutal. And anybody following this sector has to be disheartened with the state of the government if they aren't at this point. When I first got into studying cannabis and its history, the biggest skepticism that I received about our government was that journey, looking down that rabbit hole in the past and how things had played out. And a lot of people are discovering that for themselves these days. So what we're looking at from here is on the steps forward, a fast track of this playing out would likely be about 3.5 months from what people are saying as far as, an open comment period for 60 days and things like that. I do think that the administration, as I've been saying for a long time, I think we're looking at end of the summer as far as wanting that headline and momentum into the election. And so, as I've been saying, in my opinion now, the most important time period for this sector from here is going to be in the fall, which will be Florida voting for recreational. And that is, a coin flip right now as to whether that can pass or not because it needs the 60% hurdle. And so that is not priced in. Some people, enter into TCNNF and other positions on the hopes that we can get it, but it would be the kind of thing where if we go into that election and it's a coin flip as to whether it passes or not, the market will need to price in it passing after the fact. And so that's something to be watching for as well. Of course, any other states that vote to potentially legalize or medical, we'll be keeping an eye on that into the election. And uplisting, when's uplisting going to happen now? Is Schedule 3 enough for uplisting to take place? There's speculation around that. And of course, SAFE, I don't care at all about SAFE until the words passed is right behind it. So that's what we're looking at from here in the sector. Of course, any surprise merger or acquisition or investment, just like Constellation Brands and CGC, that was a big spark for the entire sector back then. That could be a surprise headline that leads to some reaction. But in the absence of headlines, the most important thing for me is the broader stock market and sentiment surrounding the broader stock market, which will impact one of the highest risk reward sectors in the entire market. And so right now, the S&P 500 and the NASDAQ are at a fork in the road for May into the summer, where we're either going to be a monthly bull flag and new all-time high and another wave of euphoria, or confirm a weekly downtrend into multiple months of consolidation. And so just pulling that up really quickly, looking at the weekly time frame on the NASDAQ, we closed strong this past week. Again, these are the two paths. We either set a lower high and break the low of 2 weeks ago, or the bulls continue their recovery and see that monthly bull flag confirm. The simple statement is if the low of 2 weeks ago holds, it's a monthly bull flag and we're going to all-time highs. There are no red flags on this longer-term chart in any way, shape, or form at this point. And, we love backburners. Daily oversold conditions for the first time coming off all-time highs is trying to mark the monthly higher low. If it does, we know that's as bullish as you can be in an uptrend. So that's what I care most about in the coming month for cannabis. It has nothing to do with cannabis specifically and everything to do with the broader market as a whole for the impact that sentiment will have on the sector. So that's my fundamental analysis for the space right now. And again, just keep in mind that from my experience and what I'm observing, the people that are holding a core and trading around it are the best off right now in this sector. Now, obviously, if you're new to trading, that's not going to be the case. It's the people that have put in a few years of experience and have maybe been around since the 2018 run in this space. But it's definitely, alleviates a lot of stress and psychological burden. A lot of people feel like they have to either be all in or all out, and that is not the case. And so, I use the bounce after the big sell-off to size down a little bit more, and I will reload perhaps depending on what setups shape up. But again, I'm much more active trading than most of you watching, and there's nothing wrong with that because that's what I do for a living. So CGC is weak, but there's a battle for 10. It's interesting that CGC is battling for 10 support and MSOS is battling for $10 resistance. And we'll get to that in just a moment. But we have, the low of Wednesday is 1021. We break it Thursday with 0 follow through. We break that low Friday with 0 follow through, but it's still weak. We are technically in an hourly downtrend. And every time we see a bull move, we just get a new resistance level. So we have a 1297 resistance level. And then on Friday, now 1127 is our resistance. Both mornings were marked by a big bull move. There was a big bull move up on Thursday, fast and hard, no supports established, and we gave it all back. Kind of like the daily move on the headline reaction, but 15% in less than 15 minutes. And then from the low of the day on Friday, another 12% move. And so there's definitely trading opportunity in both directions still. And both of those big bull moves up gave it all back into the afternoon. So the pattern the past couple of days has been the same. But again, what I care about is the hourly. And so on Monday, if we get a bull move on the morning, if it does not break 1127, it's just another hourly lower high, staying in a downtrend. What the bulls are hoping for is that this is a falling wedge. A falling wedge is when you break support with 0 follow through, and eventually that turns around and breaks bull. But if we start to close under $10 and clearly lose that support level, then that will be a little bit of a red flag. It's essentially just looking at, previous resistance and trying to turn that into support. So previous resistance before the headline, trying to hold as support after the headline. And so again, just, I know a lot of you are newer to technical analysis, a lot of skeptics. A lot of people convert after watching these videos for a while, just in terms of understanding what technical analysis is more. But here's just another example. So CGC, Friday, gave us this tightening equilibrium. You hear me talk about equilibriums all the time. Just higher lows, let's go to the 5-minute time frame. Higher lows and lower highs, just tightening up. So high of the day, lower high, higher low, lower high, sideways. And that tells us as volume is dropping off, again, it's not a huge prediction. What I'm able to say when that is happening is volatility is coming. I say that at 10:29. The break literally happens at 10:30. Again, no crystal ball. We just know we can't get any tighter. A break has to happen one way or the other. For the morning, we have a fair value of supply and demand. Supply outweighs demand on the drop. Demand outweighs supply on the spike. And then it's just doing this. And at 10:29, when I say that, the scales are perfectly balanced. And all it takes is one more grain of sand to make them do this. And so I don't notice what I don't say. Did I predict a direction that we're going to break? No, I say, get ready, volatility is coming. What that means is a trader looks at that and then says, okay, if we break 1044, I short. If we break 1058, I long. That's it. That's as simple as it is. We break 1058. Sometimes we get a break and no follow through. So we have to protect. And as traders, we looked for signs to recognize red flags, but there were no red flags here. You can see every minute was a stair step candle for 5 minutes. And at that point, you've got all the follow through you need. If you're entering at 1058, let's say you get filled at 1060, a couple minutes later, we're at $11. You're up 3.5%. You sell partial into that move. If you want to leave a runner, that's fine. It would have stopped out eventually. Or you just lock it in as a day trade. I didn't take this trade because I was about to be on the Dales report and distracted. But shout out to a couple Chart Guys members that did jump on it. Donald got the quick day maker on the move. And notice, again, we're not just buying and holding because of the signal. We're trading around it. And Cody had a really good one as well, showing an example of his orders. So what Cody did was enter on resistance breaking, or right at resistance. He was risking 1 penny. He's in at 1057. His stop loss is 1056. Most of the time you're going to stop out there, but if a really tight range is going to get follow through, then you don't. So sold for 1.5% gain, reload, and then sell for a 2% gain. So pretty much roughly a 3% gain overall. And again, a lot of people look at these moves that are not traders in this sector, that are investors or long-term holders, and say, oh, they're just picking up pennies, wasting their time. That's 3% locked in, a 3% win on the day, as otherwise we close red on CGC. And, anybody holding is in the red. So never knock a trader for getting their piece of the pie. And shout out to those that reacted really nicely on that break. Technical analysis is not predicting, it is reacting, which is exactly what those two individuals did, and it worked out. All right, so we're scouting a daily high or low. Bulls want to keep maintaining $10. I am keeping an eye out for a potential entry for a daily bounce, but I am now in conservative mode for this sector. The warning flag, the warning shot was fired on Wednesday, and now we are a bit more conservative as we watch for a daily high or low to form. What I would expect to happen is when we form a daily high or low, wherever it is, we bounce and form a daily low or high. What you will find is that these equilibriums are just fractals on different time frames. You'll tighten up on the hourly, and then you'll tighten up on the daily eventually, and do the same kind of thing. I expect we're going to trade within Wednesday's range for the entirety of next week, unless we get a headline. We'll eventually find the higher low. We'll then bounce to a lower high. Next thing you know, we're coming towards the end of the week, and we're tightening up on the weekly time frame. So keeping an eye out for that. Keep an eye out for a volume spike. You can see the volume is just slowly dropping off as things tighten up. CGC is a little bit weaker than other names because we've broken the low of the previous day the last couple of days, while other names are just trading straight up sideways. ACB, also a little bit weaker, closing at the low of the day the last 2 days, lower low each day. Same pattern though, things slowing down, volume dropping off. Bulls must hold 618, but even when we bounce, there's a lot of space for a daily lower high to be the result of that bounce. So again, it's all about second chances, right? We got a bounce Thursday morning, big move on CGC, second chance for the Bulls. It's also a second chance for the Bears. And so Bears are looking at ACB and saying, the next time we bounce, I know a daily lower high is the most likely scenario, and I missed the short on Wednesday, so I'm going to try again for a daily lower high. Just put yourself in the mindset of both Bulls and Bears, and that helps not be surprised as much, because when you're only looking in one direction and you're only bullish and that's your only mindset, you get shocked by when other things take place. So same pattern, hourly downtrend, no sign of the Bulls regaining their control, and we're heading back down to where we were pre-headline. Tilray, tightening up. So just straight up sideways. Inside bar, inside bar, inside bar. Google Chart Guys inside bar, or go to our website and search that. You'll find all kinds of ebooks and videos about them. But it just tells me there's an equilibrium tightening up on a shorter term time frame. The only two levels I care about on Monday, 217 resistance, 204 support. As soon as one of those levels break, go to the next day. And that's then the next level that we care most about. If one of those levels breaks, you want to ensure that the next one from Thursday breaks very shortly after to show follow through. If TLRY breaks 217 on Monday, but can't break 220, we know we're not going anywhere. And that would be a fake out of an equilibrium breaking. So just like I said on the 1 minute time frame or 5 minute chart, volatility is incoming. I can say that on a lot of these names. Tilray, volatility is coming Monday. If we don't break Monday, certainly Tuesday. And we know to be watching for the direction of the break, and we know to be watching to ensure that there's follow through on the break using multiple levels. Same deal though, even if it's a bull break, I would not be surprised to set a lower high compared to 252 and to keep tightening up within the range of Wednesday's or Tuesday's candle for the whole week potentially. SNDL, a little bit stronger. We broke the high of Thursday on Friday. GRWG as well. Inside bars broke bullish on Friday. They stand out a little bit for their strength. So they're positioned well. Now, if CGC and ACB keep bleeding and have another red Monday, it's possible that these names set that lower high real quick. Again, same deal. If we set that lower high, if we break the low of Friday on Monday, 228, we're just going to keep tightening up within this one candle's range. GRWG, same thing. If we do not break 304, we look for a daily lower high and then keep tightening up. Earnings are going to be approaching for this sector as well, and that's something we need to be watching for. People are hoping that adjustments for 280E and tax benefits, getting some capital back like Trulieve already did, can benefit these earnings results that are coming up as they apply backwards to Q1 and potentially further back, but that remains to be seen. We certainly know overall people don't really care much about earnings in this sector yet at this point, but definitely worth paying attention to. So tightening ranges, expecting to keep tightening up this week just on different time frames, but expecting the initial sideways ranges to break this week into bigger picture tightening. MSOS now. So nothing changes. We get no new information on MSOS until we either break 948 or 1006. We're just range bound and playing a battle. As again, the analogy that I give is World War I trench warfare. The trenches are dug right now. And we topped out Wednesday afternoon at 10:01. We then found 948 support. Thursday morning, we hold support by 5 pennies. We break resistance by 5 pennies, zero follow through. On those breaks, they lasted 1 minute, straight back under $10. Bears are very clearly defending 10. Bulls are very clearly defending 948. Again, Friday afternoon, we hold 948 to the penny. We're knocking on the door, breaking support, but the Bulls are still defending their trench. So if we break 948, Bears win the short-term battle. We're still going to look for a daily high or low compared to 832, but it's all about that short-term level first thing, and it's all about 10 resistance first thing. Eventually, we're going to look for something like this. But it's just a question of where do we find our new support level before that tightening range continues to play out on the longer-term time frame. So we got a tightening range on the hourly chart from the last 2.5 days. When it breaks, we zoom out to the daily. We look for a tightening range on the daily. The individual names looking real good for clarity in their tight ranges as well. TCNNF trying to hold support 1190, 1185, 1192. Clear line in the sand. Again, it's not a specific level to the penny, it's a zone. There's a support zone by 7 pennies here. 1185 to 1192. And as far as resistance, it's all about 1270. Break 1270, we're going to look for a lower high and a tightening range. And all the other individual big names are very similar. GTBIF did break the 1301 low, but no follow through. We look for the higher low. We look for a lower high once that bounce gets going. So heading into this week, I favor looking long more than short for a short-term trade just because we've been pulling back for a few days already. But it's, I'm not just buying Monday morning. I need a support level to go off of where I say, that's either the level it's going to hold or I'm wrong, and use that as a stop to have low risk and the reward. Let's just do a trade thesis. Okay, just an example. So MSOS, I'm not taking this trade at the moment because I don't have too much confidence in the Bulls short term yet. But let's just say I did. Let's just say, we held that support again. Nice bounce. That's it. I'm in. I'm in at 967. My stop is at 945. I'll give a few pennies of wiggle room under support. So I'm risking 22 cents. If we get the move that I'm looking for, even if I expect a daily lower high, let's say that daily lower high is at 1030, the reward is 63 cents for risk of 22 cents. That's almost 3 reward for 1 risk. That's the kind of trade setup that I look for, having the reward greater than that risk. So I don't want to use my stop down here. That's way too much risk. The risk reward setup for that trade does not make any sense. I need a new close level to be going off of to keep my risk low. And so I know that I'm wrong really quickly. And I'm wrong by just a little loss. So heading into Monday, that's what bulls are looking for. Bulls are looking for a level on CGC or a level on these other names to find a short-term daily high or low into a bounce, anticipating a daily lower high. Another way to do it would be, now we're getting in depth here. This is, again, what I do. Full-time trader, this is how my brain works every single day. If I'm looking at entering CGC, and let's say we keep holding 10. All right, I'm in at 1035. My stop is under 989. My stop is 989, whatever. And we bounce a little bit. So let's just make some nice round numbers. 1030, 989 stop. So now I'm risking 41 cents, which means if we go 41 cents higher and I sell half my position, I'm risk-free. So what's 41 cents higher than 1030? 1071. I sell half at 1071. I stick my stop at 1089 on the remaining position. If this tightening range tightens up and then breaks bull, I've got a position and I'm benefiting. If it tightens up and breaks bear, I stop out and don't lose anything. That is how I position many times in my trades. Let's look at our major names, TCNNF divided by MSOS. Who's relatively strong, who's relatively weak? TrueLeave is still just under the all-time relative strength. I anticipate with the dangling carrot of Florida, that's likely going to remain for a lot of this year. So relative strength in TrueLeave. GTBIF divided by MSOS. Relative weakness. We are the weakest compared to MSOS. We're testing the weakest that we've been in the last 2 months. Curaleaf is trying to get to the strongest it's been. And actually, we did on Friday. We got to the strongest that we've been in 4 months. So just keeping an eye on that. Still range bound overall, but just with this last week of action, we could say Trueleaf keeping some relative strength, Green Thumb getting some, or Curaleaf getting some relative strength, Green Thumb, a little bit of relative weakness. Tier 2 names have really nice tightening weekly equilibriums continuing. Again, just like we're looking at on the shorter term time frames, it's doing it on the weekly. I already did it back here, it's doing it again. Double top at resistance, right back in the middle of the range. The most important levels, 210 support, 346 resistance. If neither of those levels is breaking, the longer term time frame is giving us no new information. It's just the balancing scales of supply and demand doing this before they get to a point where we look for the break and the volatility spike. And this is a lot of names. VRNOF, same deal. Yes, we did break resistance by a few pennies, but again, zero acceptance. Break it, right back in. Tightening up. I care about 448. So big picture, this chart won't have a red flag for bulls unless that level breaks. So if I'm in a long-term position, that's a really important level for me. TSNDF has it as well. Tightening range, failed resistance, right back in. It's a little bit different because this did break support here where the other two did not, but it's still very much a tightening range right now. So I'll be keeping an eye on these tier 2 names as to how their weekly charts break. And it's probably going to break in May. If not, then early in June. Well, yeah, 3 weeks. We'll see. Same deal. Scouting the high or low. Then we're going to scout a lower high. MNMD, psychedelic space. So we got to talk correlations again to the biotech sector because a few people, and I don't care what a few people say, but they reshare my videos and laugh and swear about how stupid I am at looking at correlations between MNMD and XBI. And what I see when I see that is the fat guy in the stands yelling at the professional athlete on the floor, telling them how they should be playing. And this is the last 3 weeks. On the bottom here is MNMD, and on the top is the biotech sector XBI. We drop for days, we drop for days, we bounce for 2 days, we bounce for 2 days, we break to a lower low with zero follow through, we break to a lower low with zero follow through, we bounce all this past week, we bounce all this past week. If you're going to look at the last 3 weeks and tell me there is no correlation there, I'm going to smile and say, okay, you don't do this much, do you? Jerk. The funny thing is the people that were sharing that video watched on a Sunday night 22 minutes of my video, and they keep reposting and talking smack. What are you doing with your life? Anyways, MNMD, nice bounce off weekly EMA 12. New support of 817 is the most important thing. We've been bouncing off this for a while now. Held it back here, held it back here. And so earnings are coming up next week. We got to keep an eye on that. Looks like Wednesday, double check the date. If it's a bearish reaction to earnings, it's a weekly lower high that could shape up monthly consolidation. Same thing as the S&P 500 and the NASDAQ, remember? Are we going to set a weekly lower high and confirm the downtrend into further monthly consolidation? Or is this a monthly bull flag heading to higher highs? Well, we haven't even started monthly consolidation, so not the ideal example, but same concept. So if you don't have a position here, you're scouting, well, you're waiting until after earnings, but plenty of space for a daily high or low. We do still need to confirm a daily uptrend eventually, but really nice response to weekly EMA 12 support at this point with a solid 20% bounce off of that level. And again, the biotech sector went from the weakest sector that I watch, aside from, the weakest sector that I watch over the last 6 weeks or whatever. And then this past week, it just bounced 12% from its lows. That's a monster shift. And MNMD saw that same monster shift after being weak for weeks. So MNMD is still the name that I pay the most attention to in the psychedelic space. All right, let's recap real quick. 24 minutes, good Lord. All right, we're going to be looking for short term. We have no indication that a new support level is found. We see the battle going on, but we don't have a clear winner. We're looking for a daily high or low and short-term supports to be established for a daily bounce. We're then going to look for that daily bounce to result in a lower high. Bears are waiting for that daily lower high. Bulls are going to be a little bit more aggressive to start the week, scouting that daily bounce shaping up. Now, if we start Monday with a big red day, that means, all right, take a step back, Bulls, and be patient, because now the Bears are getting a good bit of follow through. One day at a time, every single day is going to give us new information. And again, I'm very reactive to the information I'm getting in this sector, and I'll be in and out of position. I still have a little bit of a core, still TCNNF position, again, up very nicely this year in this sector because of the lows of where we came from and the move that we've seen. And now it's just a question of, can the Bulls continue to hold on bigger picture? I don't want to see these tier 2 names break the equilibriums on the weekly bearish. I don't want to see the broader market revisit fresh lows from 2 weeks ago. And these are the things, these are the individual little clues that are going to help make up the bigger picture of where we're headed this summer in this sector. Hope you have a great weekend. Do good things. Thanks for likes and shares and stuff.